Everybody. My name is Stephen Choi. Welcome to Trading with Livevol. So yesterday I talked to you guys about a bunch of trades that I did. Let me talk about all the trades I did yesterday after I got off with you guys. So I think we did. I think I talked about Pandora, GMCR, and SPY. The one I want to talk to you guys about is Zynga. So basically what I did in Zynga is that I sold this straddle. So I sold the straddle for 13 cents because I didn't really feel like it was going to move. So hold on, looks like I have some echo. So yesterday I talked to you guys about a bunch of trades that I did. Hold on one second. Let me talk about all the trades I did yesterday after I got off with you guys. So I think I talked about Pandora, GMCR, and SPY. The one I wanted. Okay, sorry about that. Okay, little hiccups here and there, but we'll get it together. So I sold the straddle for 13 cents, thinking that nothing was going to happen. The other ones I covered. These other ones now, I was long the calls. I basically just got out of them. Micron, I just turned it into kind of a buy ride, one-day buy ride, and then basically with BHI, I did the same. As time goes, these are like residual trades that I had left. As time goes, you guys will pretty much know all my trades, but since I had to start at some point, you guys aren't going to have all the trades available right off the bat. But in Zynga, what I did was I basically did this, sold a straddle, and by the end of the day, whatever goes in the money, I'm going to have to close. Let me actually put in Zynga. So like we talked about, I think that it's going to kind of go around the 450 range, and it's going to stay there. And what I'm going to do is I'm just basically thinking of doing a time spread. So the thing that I'm working right now, and working trades, you'll see the Zynga. I'm 25-cent bid. Let me actually pull it up to buy the April 4.5 calls. It's on the Feb 14 calls, and I'm 25-cent bid. You can see that's like buying it on the bid and offer. So if I get filled, I'll get filled. If not, like I said, I'm not worried about it. I'll figure out time to put it on. So you want to put it on for a good price. So other trades I did today, I got a lot to cover, so I might as well start with this one. So you see these VIX trades. You'll see that I bought the Feb 16 calls, sold the Feb 22 calls, Feb 16 calls, sold the Feb 22 calls, and then I think I did a March one, right? March 16 calls and sold the March 26 calls for like $1.10. So I think a lot of times people might say, okay, why did you do that? Okay, so when I was, actually let me backtrack just a little bit. So basically, the market looks like it had a huge recovery here this week and turnaround. So I guess the real question is it going to bounce back up and just keep going up here, or is it going to actually roll over? My thinking is that there's a good chance that it's going to roll over, so I want to be prepared. The reason I think that, number one, is because if I look at the 10-year, the 10-year isn't really going up. So to me, it maybe seems like people are still buying bonds. And then I read this article, how people are putting massive amounts of cash into bonds and then taking it out of equity. So my general sense is like, hey, look, maybe it's over, but I don't think so, especially with the Congress and the debt ceiling and all the other stuff. So maybe it might go up to this 1800 before it starts coming back down. But I wanted to give myself some kind of way of hedging that, because it seems to me that I do a lot of, I'm a lot of my bets are bullish. So I was looking at VIX, and you see all these trades. Feb 1622 calls expiring on the 19th. This person paid $1. Then the 1722 call, 70 cents. March 1626 calls. So they're putting on huge amounts of bet, whether it's hedging or they're speculating, I don't know. But what they're doing is they're buying a lot of call spreads, even though, so if the market was definitely going back up, why are these guys continuing to buy call spreads, right? And they're paying $1. So, you know, I'm looking at the VIX, and I'm like, yeah, most likely this is a 2-week play. So most likely what's going to happen is next week it'll probably go down. But if it doesn't, it can easily go back to 22. My thinking was that, hey, I wouldn't mind doing this trade, but I always like to piggyback a trade for a better price, unless there's some reason not to. So what I started doing was I started putting in trades for 70 cents. So these guys bought for $1, I'm paying 70. The March 1626 calls, this person paid $1.35. I paid $1.10. So I have a few call spreads now, and I'll show it to you right here on the VIX. This is the Feb 1922. I mean 1622. So it's a $6 spread, but I bought it for 70 cents. So you know, my upside is 530, which I like, and my downside is 70 cents. And I also bought one for March, which is the $10 spread for 110. So this I'm going to use as my, you know, it's like a pretty good bet just in case the market turns back down. Kind of similar to, and this could lead right into my SPY. As you guys remember, yesterday I did this staggered, let me actually show it this way. I did this put spread where I sold the higher strike and bought these for basically even. So I'm going to let these things expire, and now I have these things for free. Even though they have some value, basically these I bought for free, which I love, so I put them in my pocket. What are these, you guys are saying? Well, basically this morning, I was kind of thinking when the market opened that what might be good was for me to buy these Feb 14 77.5 calls and sell the Feb 07, the one that are expiring today, 78 calls, like a one-day buy right? So my thinking was, hey, if it stays here, and I'll show you what I paid for. Okay, so if you look at it, I paid, what was it, like 41 cents, 141 to do that spread. So basically what I was thinking was if those things expire, and this was when the S&P was a little lower, I could actually roll into these, the Feb 178s, sell them for 142, and then I'll have the Feb 14 77.5 78 call spread for free. So that was my original idea, basically rip right through that. So since I liked it, and really your real risk is this market really turning around and you losing all this premium, which it didn't look like it was going to happen. So basically what I did was I rolled it into the next strike. So what I'm going to do, and I probably won't do this until at the very closes, I'm going to have to close this because these are in the money. So I'm going to have to buy these back. And then what I'm going to do is I'm going to try to sell 2 of the 78s and maybe sell 2 of the 178.5. So I would essentially end up with a Feb 14 177.5, 178.5 call spread for a very, very good price. So here I have the downside, here I have the call side, and I'm putting bets on both sides because I don't think the market's just gonna, you know, stop right here and not move. But I wanted to do it for a good and reasonable price. So that's my thinking behind it. We'll see what happens. And on Monday, I'll let you guys know what prices I did those at. Now I was thinking of actually coming here every time I was going to do a live trade and putting it in there, but it's just not really doable because I don't know when I'm going to get filled, and I change my orders or change my mind. So I think what I'm thinking of doing is kind of come around noon all the time and kind of let you guys know what happened. Okay, so another thing is this Brazilian ETF. So I saw this large print, and let me go to this one, where this person bought 1,000 of these April 50 calls for 4 cents, and then he sold the Feb, the ones that are expiring today, for 3 cents. And then as you can see, he did it like it looks kind of like dollar neutral versus option neutral. So maybe he did it for even. And as soon as I saw that, it kind of perked my interest, so I started looking into it. So I typed up EWZ, and I'm like, wow, this stock really moves. And basically, if I get away with this today, and this EWZ ETF does not go above 41 too much, I will essentially own the April 50 calls for virtually nothing, right? I mean, they're kind of worth nothing now, maybe 4 cents, but it's even better. I gotta stop kind of clicking on that, but just to have it. So if you look at it, I basically paid a penny. I'm only gonna do a 2 lot because essentially if something blew up, which I highly doubt because it's an index, but if it went up, $9, I'm gonna lose $900 per trade. But I am working more on these for even. So you can see it right here, I'm working more on even. Zynga, you can see over here, and all these other stuff, I'm kind of just trying to close out. So those are my trades. My account, I actually had a pretty good week. So I started off the week with 49,300. Looks like I'm going to end at around 51.3. What is that? That's like $2 grand. So it looks like I'm going to make slightly over 4% for the week, which I would say has been a really fantastic week, and especially in the light of the fact that for the beginning part, for basically 3 weeks out of this month, I was getting my butt handed to me. So I'm looking forward to my new way of trading, which is not so much different from here. I'm trading a lot smaller. So like if a couple of trades go against me, I'm not out. So I'm gonna do more trades like that. As you guys can see, the value of this application again comes through. So the VIX and the EZW, it's not necessary research I did. I'm basically piggybacking probably a research somebody else did who probably has more knowledge of the product or the stock or the index than I do. And all I'm doing is researching and trying to piggyback, right? So if even this guy, this one, he's buying this call spread, right? So if you guys thought, okay, I pay 50 cents, I think it's going to go to 44. Let's see. I think that's actually a pretty good spread. Right? So I look at the chart, I look at the vol, right? So the vol's, it's not the cheapest vol, right? So it's let's look at stats. Right, so it's 37.15. And currently it's at 27. So yeah, it's in the upper range. You see like bunch of calls traded. You see that the net deltas are bullish and they're buying some premium. But basically, it's not that big a deal in terms of this. Nothing here is showing me anything, but this, all these trades, and also looking at the technical makes me think, hey, maybe this 42 to 44. So basically what you're saying is you're going to put up 50 cents, and by March 22nd, this ETF is going to rebound. So you're kind of making a bet on the emerging markets, right? So let's see what those options are actually valued at right now. So March 22, 24, let's see, 42, okay. So March 42, I'll be buying these and selling these. And they did it, what, for, I think they did it for 50 cents. And sorry for the little mess here, but I'm broadcasting this on one screen, but I actually use 4 screens. So it looks like they did it for 50 cents. And we can do it maybe for 45. So I don't know. I don't mind doing it on the bid. So maybe for 43, I'll send in an order. And boom, there you go. I have just that quickly. I basically am going to piggyback this spread, which this guy did, but I'm going to do it for less. And what you're trying to do is basically put on percentage bets that are in your favor, and you just keep doing that. And then over the long run, hopefully, it'll pay out. So the trades that we did today, you can see is VIX, EZW, VIX, and SPY. My biggest question mark right now is the SPY, because I don't really know exactly what to do, because it basically just ripped through all my all these calls, right? So even though I made the premium here, as you can see, I'm actually losing on the trade. The real question is, what do I do from here? I think I wouldn't mind maybe rolling into a higher strike, or maybe even keeping it naked, but I'm not sure what to do. So and that's the thing about trading. It's not always like absolute. So things change and they're fluid, and depending on where this ends up, I might change my mind. So if we actually rally another 8 points up to here, then I actually would think on Monday we have a better chance that we'll open down than up. If we end right at 1790, I think we will actually have one more day or so of upside. So that's just my idea, and literally it could change by the time I come in on Monday. But I hope you guys enjoyed what I have. Basically, what I'm trying to do is show you guys how I use this software. It's an awesome software if you're going to trade options, and I just can't imagine people really trading without this kind of information at your fingertips. If you're trading options. If you're not trading options or stock, well, that's a different story. But if you're trading options, as you can see, you have so many places where you have order flow information. So here you have every trade that's coming through. Green is it's traded on the offer. Red is traded on the bid. You can see all the largest block trade, culmination of the trades together, and then you could set alerts to it. And then I have this watch list. So what I do is, let me see if I actually have this setting correct. Okay, 1,000. So basically what I am saying here is show me everything that's 1,000 contracts or more. And this is where I got EWZ. And there's so many of these. Let's see, when was it? I think it was 12:59 was when it traded. Well, yeah, I can't find it now. But anyway, looks like maybe I had it in the different setting, because these are all less than 1,000, and then I see it going higher. So, but basically what you do is you set it, and then it'll tell you stuff that's trading, that's in block trades. So it's true, like this one, March 22 AMTD. Let's look at it. March 22 calls. I don't have any position. March 22 calls. Let's see. March 30. Yeah. So you see it. You see this volume. So somebody's selling this. Don't know why. Maybe it's a buy, right? When is earnings and AMTD? Let's look at earnings here. Looks like it was January 21st. So the next earnings is going to be mostly like April. So here you see last two times it was April 17th and April 16th. So I know the one that they're selling is actually pre-earnings month, right? So the most likely this would be the earnings month, and you can actually see on the segments right here. See how the Feb is 22, 23, and the earnings month it jumps up, and that's a really good way of knowing, even if you don't know exactly what the data is because nobody announced it. Just by looking at the spread and the skew, you can tell like, hey, most likely the earnings month is the May and not March. And this person is selling this. You see there's 2,000 open interest. This person created this last time. So on February 4th, this person basically, the 2,000 contracts total on that line, and it traded between 80 and 90 cents. And we'll see. It looks like it's higher now. We'll see by Monday whether this person is doubling down or not. So there's like tremendous amount of info on this, and hopefully as I go through all these trades, you guys can see all the functionality and the order flow information and the volatility information that everyone needs to really trade well in this marketplace. So thank you very much. Hopefully I'll see you guys soon and talk to you guys on Monday.